You're a student, a graduate, or an expat in Germany, then you may not be aware of investment options that are specific to Germany. In the US, you have the 401k. What do we have in Germany? What are the tax rules here if you buy and sell assets like stocks or real estate? I'm going to discuss different investment options mainly to give you an overview. I'm not a financial expert and I'm not going to tell you what you should invest in. It's better if you inform yourself in more detail about options that suit you most or consult an expert later. Nevertheless, I'll share my experience and some advice here and there. I also put many useful links about the different topics below in the description. Is it necessary to invest in Germany? If you're an employee, you know that a part of your salary goes into your state pension fund. When you retire, you get a pension. So why should you care about investing in the first place? Why not spend what's left of your salary today? As an employee, you get a letter like this from the German pension fund, if you paid into it for at least 5 years. The letter provides a prediction of your pension based on what you earned in the past. The average salary in Germany in 2021 was 3,462 euros per month. Someone who would have paid into the pension fund for 45 years would now get a pension of 1,539 euros pre-tax. That is less than half of the salary. There's an annual pension increase, but this is barely enough to compensate for inflation. In 45 years, you may get twice the pension in euros, but the purchasing power of the euro will have decreased. If this isn't shocking enough, you will find this paragraph in the letter. In summary, it says invest in additional pension schemes because your state pension most likely won't be sufficient for you to live off. If you have almost no savings, you will have to invest your money if you want to avoid serious financial problems in the future. There are of course several more reasons to start investing as early as possible. I recommend that you set your individual short-term, mid-term and long-term financial goals. By the way, if you're self-employed, you need to take care of your retirement plan yourself anyway. I've broken the investment options down into asset classes. We start with deposits, which are mainly bank accounts with different interest rates. In many countries with high inflation rates, you get a high interest rate from the bank, often in the 2 digits range. It's quite common to keep money in the bank account for a fixed period. In Germany, you usually don't get interest for money in your checking account. Therefore, you should only have as little as possible on your checking account. 3 months worth of salary is enough usually for emergencies and purchases. I made a comparison online for other account types that give interest. A savings account where you can access your money daily gives you maximum 0.15% yearly. A fixed deposit where you don't have access to your money for 10 years only gives you 1.41% yearly. The average inflation rate for the past 10 years was 1.4%. However, it is increasing almost dramatically in Germany. In 2021, it was 3.1%. That means investing in a fixed deposit equals losing money. It's still better than doing nothing at all because you're at least reducing the damage. It's one of the safest investment options, but nowadays also one of the least attractive ones. The government implemented a few subsidized pension funds that you should know about. Let's start with Riester. Here's the basic principle. You pay a certain amount into a pension fund. The government adds money to that account. The amount depends on whether you have kids or not. The great thing here is that you can deduct your payments from your income tax up to a certain amount. That means you pay less tax and every year you get money from the tax office. Plus, this is a very safe investment with a guaranteed pension. And if you're clever, you will choose a Riester contract that invests your money in the stock market or in something else. You can let this money grow without the risk of losing it all. Sounds great, doesn't it? There are some downsides and many pitfalls. I won't cover everything, but just a few key points to give you an idea. Keep in mind that the pension you get when you retire will be taxed. Since you will probably have much less income as a retiree, at least you'll pay less tax than the tax you saved while working. You can't access your money before you retire. You could cancel your contract and get your part of the payment back. However, you lose all benefits and lose what you already paid as administrative expenses. Yes, there are expenses. A provider must manage your account. Then you pay acquisition costs and costs for every index fund if your money is being invested. This can eat up your whole allowance and even more. I fell into this trap many years ago. The only ones profiting from this whole thing will be your provider and your agent. Lucky for me, the index funds performed quite okay. There are so many providers and options to tailor a Riester pension fund that it can be difficult to find a good one for yourself. If you go to an agent or your bank, you could end up with a very expensive contract that benefits the agent or the bank. I recommend that you educate yourself or consider a paid financial consultant. You pay them once and they are obliged to present options that benefit you the most. They don't get commission. If Riester is worth it depends on your income, your family status, and your contract. Drop a comment if you're interested and I can make another video with calculations for different cases. Then there's Rürup. It's also a pension fund but without allowances from the government. You can get tax deduction for a high amount per year. Like Riester, you can invest in an index fund or in other options. But be careful, a Rürup contract cannot be terminated. You can only access the money when you retire. Then again, you're gonna have to deal with the same pitfalls as with the Riester fund. Then there are several branch-specific pension funds and company pension funds. They can be very attractive because they are safe and often provide a high allowance. If you're thinking about staying in a branch or in a company for several years, please go to HR and ask for the available options. For the past decade, the real estate market really heated up in Germany and costs for rent and real estate exploded. There's no dinner without this topic on the table. Is it worth investing in real estate in Germany? I have real estate and I can tell you that the answer to that depends on too many factors to cover in this video. For now, let me tell you the options and the key considerations. You can buy a place for yourself, buy one and rent it out, invest through crowdfunding platforms or through other options like real estate investment trusts. For the first two options, it's obvious that we're talking about long-term high capital investments, not necessarily for beginners. But since they require equity capital, you need to prepare yourself long before you make such an investment. Investing everything in stocks today, knowing that you want to buy a house in 5 years, is a risky decision. The stock market may be in decline when you need the money. The risks of investing in real estate in Germany are on the lower side though, especially in metropolitan areas. Even if you made a bad investment, you're not going to lose all of your money. The place is always going to be worth something. But there are several risks that can diminish your return drastically. An investment with a low or negative return comes at an opportunity cost. You could have invested in something else with a higher return. There's something that I want to clarify about buying a place for yourself and buying a place purely as an investment. From the financial perspective, there's a big difference. If you buy a place as an investment, you're looking for factors that are optimized towards making as much profit as possible. If you buy a place for yourself, you will make compromises. Buying a place for yourself is a lifestyle decision that will come with additional costs. Specifically in Germany, renting out a place comes with tremendous tax benefits. It's an investment. You could even say it's a business. Buying a place for yourself doesn't come with those benefits. Let me know in the comment section if you want to learn more about this topic. I have prepared calculations in the past to compare living in my own place, buying and renting out, and investing in the stock market instead of buying real estate. I'd be happy to share that with you. If you plan to buy real estate, you should have saved at least 10% equity capital. Better is the 20 to 30% range if you want to get better conditions from the bank. So you need to start saving now, or you need someone who will financially support you. The prices for real estate have never been higher, but the interest rates have gone down over the years to below 1% per year at some point. Just a few months ago, the interest rate started to increase again. It's going to be interesting to see what effect that will have on the real estate market. You certainly don't want to buy at a high price and have a loan with a high interest rate. If you buy real estate, you're pretty much bound to it for a while. If you sell real estate that you rented out for less than 10 years, you pay about 25% capital gains tax. Only after 10 years, selling is free of tax. That is to avoid that real estate is used as an object of speculation. If you have lived in the property yourself for 3 years, you can sell it without tax. You can invest in real estate in Germany through crowdfunding platforms, just like you can loan anyone money in Germany on a crowdfunding platform and get interest. That's called peer-to-peer lending. You can start with as little as 10 euros. Annual returns like 7% and higher sound attractive, but there's a huge risk of losing money. Let's say you evenly spread out your investments to 100 crowdfunding projects. You will lose all money on some projects and this will drop your overall rate of return. These types of investments count as high-risk investments. The asset classes that I talked about so far had many details that are specific to Germany. The next asset classes are globally relevant. There are simply too many types of assets to cover here. These are just the most common ones. My goal here is to make you aware of a few general things that are relevant for people who live in Germany. For example, tax rules for returns on investments, or how you can open a brokerage account in Germany. If you sell stocks or index funds in Germany, you pay capital gains tax. That's a little above 25% on returns. Every person in Germany has a tax-free amount of 801 euros. Only if your returns exceed that amount, they are taxed. If you have different investment accounts, make sure to split up your tax-free amount and send an exemption order to each broker. You can open a brokerage account at pretty much any bank, but you can also open one at an online broker. It's easier than it ever was. At least compare the following criteria when looking for an account. What are the costs for the account? What are the transaction costs for buying assets? What assets are available? Exchange tradable funds are very popular today, but you can't get all of them with every brokerage account. Many investments on this list are in the danger zone. Be aware of the difference between investment and speculation. If you set up a 10-year savings plan for the MSCI World Index Fund and you're not planning to touch that money, that's an investment. An index fund that maps the best companies in several sectors isn't going to plummet completely. It's just too broadly diversified. In the worst case, give it a few years to recover after a financial crisis. If you buy stocks of a single company because they will launch a new product next year, if you're thinking of selling your stocks after that to make a quick profit, then that's speculation, and this can go sideways. Trying to get rich by accepting a high risk rarely works out. It will take a while for you to figure out to what degree you should diversify your investment portfolio. Diversification reduces risks, but also reduces the rewards. If you gain exceptional expertise in a certain area over time, you can use that to your advantage. You can focus more money on a certain type of asset. You are the most valuable resource. Investing time and money in educating yourself will increase your value and lead to higher returns. If you continuously educate yourself, you can get a better position with a higher salary. Thus, you have more money to invest. You can invest in learning how to start a business, one of the best ways to become financially wealthy. You can invest in knowledge about investing. This way you'll put your money to better use and get higher returns. Don't hesitate to spend money on proper education. You can get a significant part of that money back from the tax office. If you want to know how, I have the right video for you on StudyFox. You may say debts are not an asset class. If you would assume that debts are an asset class, then you will find that it's like money invested with a negative return. Is the interest rate of your debt significantly higher than the expected return of a very safe and conservative investment? If yes, then it's highly recommended that paying off that debt has priority. Insurances aren't investments, but they add a layer of safety to your financial plan. In Germany, you can get basic insurance at low cost. You want to reduce risks. It only takes a second to ruin your financial plans. I've seen those things. At least you should have a liability insurance which costs roughly 50 euros per year. If you accidentally break anything valuable, you're safe. Also, a disability insurance is among the recommended ones. If you're not able to work anymore, you will continue to get a decent salary. But there are also many insurances that you should avoid. I've dealt with this whole topic intensively. If you're interested in an overview of insurances in Germany and my recommendations, I'd be happy to make a video about it. Just let me know in the comment section below. What's my conclusion? At first, I recommend that you make a short-term, mid-term, and long-term financial plan. Figure out how much money you need to set aside for your personal goals and how much money you can invest. Then invest in yourself to earn more and make better investments. Focus on paying off debts with high interest rates first. Reduce financial risks by looking into very basic insurances. Start now, but start small. Even investing just 10 euros per month in an index fund is a very important experience. You'll learn how it works and how to read the numbers. Your mind will be more open to learn more about investment. After a while, you'll feel more confident in setting up more serious savings plans. If you have a well-paid job, but still find it difficult to save money, maybe my video about a common fatal spending habit can help you in making some changes. Let me know if you want me to make another in-depth video for any of the investment options I mentioned. Don't forget to like this video and subscribe to StudyFox. See you soon.